continues to recover yesterday, where all the four major US stock indices managed to close in the green in anticipation of the AI juggernauts NVIDIA earnings after the close of the US session yesterday, Wednesday, 25th of February. What's interesting over here is that NVIDIA earnings and revenue guidance managed to beat the street, but however, investors reacted rather tepid. NVIDIA after hours shares closed almost unchanged, right below and slash testing a key upside potential trigger level at 195.95. Gold continues to hold rather firm, trading a modest gain of 0.4% intraday as it continues to hold above its 20-day moving average. Very good morning to all and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Thursday, the 26th of February 2026. So let's have a quick look at the disclaimer first before we jump into the gist of today's Daily Dose. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so here we go. So let's have a quick recap what has taken shape yesterday first. And just a heads up, today will be a toned down daily dose. That means I only covered key cross asset class updated levels and as well as two charts of the day. So let's start with what has taken shape yesterday. So yesterday will be pretty much key in terms of the performance of the US stock market ahead of NVIDIA results. So what we could see is across the board, we see a series of green yesterday. Four of the major US stock indices closed in the green, led by Nasdaq 100, given the fact that because NVIDIA is the biggest market cap stock in the Nasdaq 100, and even it has a higher weightage compared to the SPX over here. So SPX itself, the NVIDIA is also a bigger, is also its top market cap stocks. So Nasdaq managed to rally up by 1.41%. outperforming the rest of the other three major US stock indices, where the SPX closed 0.81%, the Dow Jones 0.63%, and the Russell 2000 0.41%. So if you look at the heat map of the S&P 500, for sure, by the close of the US session yesterday, NVIDIA rose 1.41% in anticipation of a better than expected earnings result and revenue guidance, which indeed materialized as expected. So if you look at the NVIDIA results yesterday, it actually blew the street estimate over here. So let me expand my screen for you guys to take a look. All right. So NVIDIA initially surged after hours. Okay, later I'll show you the intraday movement of the share price, right? It surged after hours, hitting the $200 psychological level. Right after the earnings result hit the wire over here. So it was a very strong earnings result over here, hit the 200 mark over here. So there was a spike up. So by the time the after hours trading ended, so that's around about 7 a.m. Singapore time, it actually, the pop-up dwindled down and closed at around 19. Later I'll show you the latest price. It's 192.85. So let me very briefly quickly share with you the numbers first before I talk about the intraday movement of the share prices of NVIDIA. So the company reported quarterly revenue of 681 billion, up sharply from a year earlier and also above Wall Street expectation. So earnings per share came in at 1.62, also beating forecasts over here. So that actually reinforced NVIDIA dominant position as a primary supplier of AI computing hardware, powering providers, startups, and enterprise AI developments over here. So let me share with you guys the outlook over here. So even the outlook, right? The company projected around 78 billion in revenue for the next quarter. That means, i.e., will be this Q1 this year, also exceeding analyst estimate. All right, over here. So given the fact that the primary driver revenue of NVIDIA now focusing on its data center business. All right. So now, very interestingly, let me share with you the share price movement of NVIDIA. So this is the chart of NVIDIA. Why NVIDIA is very important. because like I mentioned, NVIDIA is the AI juggernaut. That means, i.e., its share price movement will have a sentiment impact on AI optimism team play going forward. So what I could see is that this is the share price of NVIDIA, the daily chart after the close of the US session. Oops. It actually prompted a key resistance level at 195.95 over here. So this 195.95 is very important. Why? Because since the high of 20th of November, it has been trapped inside this sideways range, holding above the rising 200-day moving average and holding above this medium-term ascending channel support drawn from the low of 7th of April 2025. And this will be my medium-term pivotal support of NVIDIA. So let me expand the screen. 169.55. So yesterday's release, not yesterday release, today early Asia session, NVIDIA result release. That means at right after the US session close. That means at today Thursday, right after 5 a.m. Singapore time, there was a pop-up. All right. So this chart here, daily chart, doesn't take into account of the after hours trading session. So you got to flip in trading view, you got to flip it to the hourly time frame chart. You're able to see the price movement. So you go to the hourly time frame chart over here. Let me expand. So yeah, this is the after hours movement. So the after hour movement will be highlighted in a different color called turquoise over here. Okay, not turquoise, kind of a light blue color over here. All right, so this is the after hours movement of the share price, and this one in orange will be the pre-market open. All right, pre-market open. So pre-market open starts at around 5 p.m. Singapore time over here. So this is the after hours. So after hours there was a pop-up. All right, you could see at the 5 a.m. Hourly mark Singapore time, hit a high of 203.549. Right, so let me put it in right thing. Okay, over here. Then after the after hours closes at the 8 a.m. hour mark Singapore time, it ended at 195.93. So almost unchanged from yesterday price. 195.93 over here. So 195.93 is right exactly below the key range resistance of 195.95. So therefore, today price action movement will be very, very important. All right, so this is the after hours. It pop up, can't maintain, it go down to what, 195.93, around this way, right below 195.95. So in today's trading session, it will be very important for NVIDIA whether we are able to see our daily close above 195.95. And if we have a decisive daily close above 195.95, it could potentially lift the sentiment of the Nasdaq 100 and also lift the sentiment of the SPX 500, which potentially could see it churning upwards. All right. So later I'll share you the chart of the intraday movement chart of the SPX 500, the Nasdaq 100, and as well as the US Wall Street 30 over here. Now, this is the state of the US stock market, primarily driven by NVIDIA, especially on SPX 500 and the Nasdaq 100, given that NVIDIA is these two indices top market cap stock. Now, over in the FX market, the dollar continues to weaken as expected, and we will share with you guys what is the movement of the US dollar now. So if you look at the 5-day rolling performance of the US dollar against major currency as of 26th of February, as we are speaking, the dollar is the weakest against the Aussie, followed by the Chinese yuan, and followed by the sterling pound over here. And even the spike up in the dollar yen also got turned downwards as well. And if you were to look at the dollar index chart over here, okay, so the dollar index chart, what we could see is that it has this bearish reaction of the 50-day moving average, I think as a resistance at the 198.05 level. All right, 198.05 level. So net overall, what we could see is that the dollar strength that was being seen during the last week Chinese New Year week got kind of eased off or dwindled off and can't break above the 50-day moving average at 198.05. And intermediate support level to watch will be 197.27. So breaking below 197.27, which is the 20-day moving average, and as well as this ascending trend line support that has been in play or in shape since the low of 27th of January. Okay, sorry, let me do it in another line. Yeah, this one. All right, so that also confluence very closely to this ascending trend line support as well. Let me put it in a different color. Right, 197.27. So breaking below 197.27 potentially will indicate that the rebound that is being seen on 27th of January is over, and potentially we may see another round of bearish impulsive downward sequence for the US dollar index, implying in general dollar weakness going forward. So this is the key support level to watch, 197.27. A breakdown below it with a daily close potentially eradicate the ongoing the corrective rebound that was being seen on 27th of January and transverse the trend back into a bearish impulsive down movement for the US dollar index, representing broad-based dollar weakness in general. All right, so that's the state of the FX market. Very interesting movement as the US dollar index failed to break above a key recent level and is now threatening to break below a key downside trigger level at 97.27. Okay, so that pretty much sum up the state of the global markets. I will share with you guys. And now let me take you through the updated levels on the markets on various key asset classes before I jump into the charts of the day. All right, so updated levels I will share you guys will be the US stock market. All right, over here. So let's start with the US Wall Street 30 over here. So the US Wall Street 30 yesterday pierced past our pivotal resistance level at the 49,265 level over here, 49,265 level. It pierced above it and hit the 20-day moving average before trading in a minor pullback during today's Asia session. And with the reintegration back above the 50-day moving average, it seems to us that potentially it may do a drift up to test this key resistance area at 49,707, 49,940 in the short term. All right, this next resistance level. So what we'll do over here is that for today, I will have a pivotal support at 49,079 over here, which is right exactly at the 50-day moving average, for it to potentially drift upwards to test the next key resistance level at short-term resistance level at 49,707, 49,940, which is rather important because this 49,940 was previous minor swing high that led to a fresh all-time high on the 11th of February and almost retested it again on the 12th of February before shaping this choppy minor corrective decline sequence. All right. That took shape in the last week or so. So a clearance above 49,940 will allow the bulls to gain better traction over here. But in the very short term, we're taking things one step at a time. So pay attention to this 49,707, 49,940 in the first step first. However, if price action fails to do any push-up and break below 49,079, then the trend will flip back to this choppy corrective decline sequence again for the US Wall Street 30 to expose the next near-term support level, 48,710, followed by 48,388, which is the minor swing low area of 2nd of February and 21st of January this year. Right, so that's for the US Wall Street 30. Next will be the SPX 500. So the SPX 500 managed to clear above our upper neutrality range that we have yesterday at around the 6,905 level, and also cleared above the 20-day moving average as well over here, and the 50-day moving average. So with that, potentially we will flip now to a bullish bias on the SPX 500 using 6,905 as my short-term pivotal support. Resistance level to watch for today, 6,972, which is yesterday's intraday high, and as well as this minor descending trend line that I drew from the current all-time high that was printed on 28th of January this year. Above 6,972, we'll see a probe at the all-time high area, 7,005, 7,014. Only a bearish breakdown below 6,905 will invalidate this minor bullish scenario for today and see another round of choppy corrective decline sequence back towards the range support again at 6,822, 6,797 over here. All right, and 6,822, 6,697 is also this minor ascending trend line that has been in shape since the low of 6th of February. right over here. Okay, so that's for the SPX 500. Updated levels for the Nasdaq 100. Also cleared above the 20-day moving average and so cleared the upper boundary of our neutrality range yesterday. Then this upper boundary of the neutrality range will be my short-term pivotal support area, 25,084, 24,955. So with that, I will flip to a mild bullish bias for today on the Nasdaq 100. Resistance level to watch will be at 24,430 slash 25,430, pardon me, slash 25,580. Above it, potentially seek out the key swing high area, minor swing high area of 30th of January and 3rd of February, I think as the next intermediate resistance at 25,940. Right. However, if price action break down below 24,950, this mild bullish bias will be invalidated to see another round of choppy corrective decline to retest 24,580, maximum 24,333. All right, so that's for the updated levels of the Nasdaq 100. So now let me share you guys the updated levels for gold as well, given that gold is primarily of interest due to its price movement. So for gold, like I mentioned, it continues to show modest gain, intraday up about 0.4%. So it continues to hold above the 20-day moving average and also our pivotal support at 5,046. So still maintaining this bullish bias in the very short term to see the extension of this ongoing corrective rebound from the low of 2nd of February. Next resistance level to watch, 5,307, 5,320. Only a breakout above 5,320 may expose the minor swing high of 30th of January at 5,448, right? 5,448 over here. However, a price action breakdown below 5,046, then this corrective decline rebound extension will be negated to see it drifting downwards towards 4,960, 4,842 in the first step. Right, so that's for gold XAU / USD. Another instrument that I want updated levels for you guys to share with West Texas crude oil because of the key risk event that is taking shape today. So later I'll share with you the key risk events surrounding West Texas crude oil, which will be the third round of the US-Iran negotiation talks. And US-Iran negotiation talks has a significant impact on the West Texas oil in the past 1 month or so. So price action can break above our first resistance level, which is 66.98 since the retest of it on Monday. All right, before drifting downwards. And right now it's testing our short-term pivotal support that we have previously at 65.59. So why I do that, given the situation that is unfolding today due to the due to the highly sensitive US-Iran talks, there could be much more wider intraday movement swing. So I will actually adjust my short-term pivotal support downwards today very closely to the 20-day moving average, which is this former minor swing high of 17th of February, where previously it did a dip and before shaping a very strong push up during last Thursday session over here. Now turns into a key psychological pullback support at 64.15 after the breakout of 64.15 previously, where it unleashed a very strong intraday move in the last Thursday and Friday movement. So using an adjusted downward pivotal support due to today's event, US-Iran talks, that may induce a higher dispersion of intraday prices. So 64.15 short-term pivotal support still maintain that bullish bias on West Texas oil. First resistance you got to surpass for sure will be 66.98, above seek out 67.80 in the near term. So however, if price action break down below 64.15, then potentially this bullish bias will be negated for it to shift down towards the range support level at 62.38, 62.05. Next, maximum 61.12, 60.64, which is the rising 50-day moving average. All right, so these are the updated levels that I'll share with you guys pertaining to their respective interesting drivers that is taking shape today on a shorter term basis. So let us now proceed to the second segment, which will be my charts of the day. All right, over here. So before I share with you guys my charts of the day, let me expand my screen. All right, good. So charts of the day, firstly, I'll touch on one will be the FX market over here. So one of the charts of the day pertaining very interesting will be the sterling dollar. All right, so sterling dollar will be my chart of the day as it continues to hold above this minor ascending trend line that has been in play since 20th of February. RSI also continues to have hover in a bullish dynamic. No bearish divergence so far as it hit the overbought level yesterday, hit the overbought level into yesterday and in today's Asia session before doing a slight pullback. So with that, I will have two key support level to watch. The first support level will be right at the bullish breakout of this minor range resistance that was previously in play since the start of this week, 23rd of February, did a bullish breakout on yesterday US session. So this will be my first pullback support level to watch, will be right exactly at the 50-day moving average as well. This one in dark blue line at 135.34. Maximum allowable pullback will be at yesterday's bullish reversal hourly hammer candlestick that was formed at the 1900 hour mark. That means at 7 p.m. Singapore time hour mark, and also correspond very closely to this minor ascending channel support level as well. So that will be 134.90. So using 134.90 in any pullback, we will have a bullish bias. Next two resistance level to watch will be 135.88. A clearance above 135.88 will allow the bulls to gain better traction. Why? Because it surpassed another key intermediate moving average, which is 20-day. And after 135.88, it may expose the next intermediate resistance level at 136.67. Only a bearish breakdown below 134.90 will negate this bullish bias view and see it floating downwards to revisit the key 200-day moving average, which confluence with the minor swing low of last Thursday and last Friday at 134.55, 134.34. Right, so that will be my charts. One of the chart of the day. The second chart of the day will be the high flying Japan 225 over here, which is represented in Nikkei 225. Still recall that the Japan 225 we were bullish, and indeed it hit our resistance level at 59,884 level and printed a fresh all-time high at 60,075 over here. That was in the last hour of the US session yesterday. All right, so what we could see over here is that the push up from the low of this Tuesday, 24th of February, is a bit overextended. So why do I say that? Because the hourly RSI has flashed out a bearish divergence yesterday, and what we could see now is that the hourly RSI also has a breakdown below a parallel support level. Now breaking below the 50 level mark, and now still has room to hit the oversold region over here, indicating that in the very short term, the Japan 225 is now put in a way that is now trying to consolidate after the very steep up move that was being seen on Tuesday, Wednesday, and Thursday. And that means there could be a potential intraday counter trend decline sequence that may take shape on the Japan 225 before a new bullish up leg potentially unfold. So with that, my chart of the day today will take advantage of the potential counter trend pullback that may take shape with my short-term pivotal resistance at 5,884/6,075, which was previously yesterday's resistance for my previous bullish bias. Two near-term support level to watch for this counter trend pullback support, counter trend decline sequence: 57,790, 57,140. Maximum 56,096, which confluence with the rising 20-day moving average. But once price action hit at the 57,140, I'll be on the lookout for any signs of a new bullish elements like a hourly bullish candlestick to flip my bias back towards the bulls again for the Japan 225. All right, so this will be my two charts of the day due to its interesting technical configuration in the very short term. One will be a bullish bias on the sterling pound, the sterling against the dollar, where I share with you guys. Another one will be a short-term intraday bearish bias for a potential intraday counter trend decline move on the Japan 225 that represents Nikkei 225 within its medium-term uptrend phase that is still intact. All right, so that's cover my chart of the day, the two charts of the day. Now, before we end, let us now take a look at the economic calendar / events. What are the data to look out for? All right, so today will be the Thursday over here. All right, so over at Thursday during the European session, At 4:30 p.m., we have ECB President Lagarde speaking, so that could influence the euro dollar and the euro crosses. And going forward, at 6 p.m. Singapore time, we have the Eurozone aggregated economic sentiment data. So that will be the month of February. So market participants expecting a slight uptick to 99.8 from 99.4 previously in January. So that if it goes above what market is expecting, that could have a significant positive feedback loop on the euro dollar, the euro crosses, and in some form the Germany 30 CFD index over here. And after that, at 9:30 p.m. Singapore time, bear in mind that this is a tier 2 job data because it's released every week and it's quite volatile. So we call it the initial jobless claim. That will be at 9:30 p.m. Singapore time. So this data, market participants is expecting a slight increase to 215K. All right, so that could influence the major US dollar pair and as well as the US stock indices movement. And 11 p.m. Singapore time, we have one Federal Reserve official speaking, Fed Bowman over here. So that's pretty much sum up the US session. And before we start our daily dose tomorrow at 11 a.m. on the Friday, 27th of February, key tier 1 Japan data that could especially shape the movement of the yen crosses and the dollar yen will be this leading inflation trend data out from Tokyo. So Tokyo CPI data will be out at 7:30 a.m. Singapore time tomorrow on a Friday, right before our daily dose at 11 a.m. So the Tokyo core CPI data for February, market participant is expecting a slight downward drift to 1.7%. Below 2% over here. So bear in mind that this is a leading inflation trend data. So market participant is expecting a drift downwards over here. So if it's going below what market is expecting, that could actually see another volatile movement on the dollar yen again over here, given that it's below the Bank of Japan long-term inflation target of 2%. Then also at 7:50 a.m. we have Japan retail sales and Japan industrial production. So both of these data also could potentially sway the dollar yen, the yen crosses, and as well as the Japan 225 CFD index. And last but not least will be this Iran-US nuclear talks. This will be the third talks to resume in Geneva today, 26th of February. So that could also potentially influence the oil price, WTI crude oil, and also the safe haven asset like gold and silver. All right, so with that, that's sum up today's Daily Dose of Market Insights. I'm Kelvin here, signing off. I wish you guys a great day ahead, and we shall speak again tomorrow. Thank you.